Hello guys, it's Dale here, and in this video I'd like to show you a VWAP trading strategy which you can use when there's a trend. Now, VWAP is one of my favorite volume-based indicators. It is represented by this yellow line. This is a VWAP, but more importantly, I want you to look at those gray lines, this one and this one, because those are first deviations of VWAP, and this trend trading strategy is working with those. All right, so we'll be looking at the first deviations of a VWAP and how you can use them in your trading. So what you're looking at now is NinjaTrader 8 platform, and I'll be using my custom-made VWAP indicator, which shows the VWAP line, first deviations, and it also can show second deviations, but I'm not using those in my trading. In this strategy, I'm only using the first deviations, those two. So that's why I disabled the second deviations and you see only the VWAP and the first deviations. So that's what you see on your screen. The current VWAP, which I have here, is a weekly VWAP, which means that it starts to print at the beginning of a week and stops at the end of the week. And then it starts calculating anew. Now, currently I'm looking at 30-minute time frame, which is my favorite time frame for day trading analysis and trading. And the first couple of trading examples will be on the US dollar, Canadian dollar. So let me now talk about the steps of the strategy. It's very, very simple. As I was saying, this is a trend trading strategy, which means that we want to trade this when there's a trend. Now, how to tell there is a trend? Very simple thing how to identify that there's a trend is to look at the first deviations, which means this line and this line. If those are trending, which means they are not moving horizontally, but they are like this, at least one of them is like this, then we are in a trend. This is a very simple way how to tell that there's a trend. And what you want to do is you want to trade pullbacks to the first deviation. So in here, I want you to look at this first deviation and pullbacks to it. In a short trade scenario, you want the price to move below the first deviation, like in here, and then make a pullback to it. And this is a place where you go short from. Boom. Like this. And then again, the price is below the first deviation. We are still in a trend, in a downtrend. So you wait for a pullback. Boom. Another short. Now in here, as you can see, the price is also below the first deviation. So when it hits it, it's another short. The core of the strategy is as simple as that. Now, before trading this strategy, you want the VWAP and the first deviations to develop. So the week is starting in here, but as you can see, the first deviations are not really developed too much. So I don't trade the beginning of the week. I wait for the first deviations to develop and then I trade. So usually not on Monday, Tuesday sometimes, then the rest of the week is fine. There's also one case, one possible trade here, and it is this pullback to the first deviation, short from here. In this case, this was macro news, and I strongly recommend not trading during macro news. This was the NFP news on the US dollar, and also at the same time there was the GDP news on the Canadian dollar. So very strong macro news in here, so no trade from this place. All right. If there was no news, then it would be fine to go short from this place again. So that's the core of the strategy. Let me now show you a couple of more examples. And the next one will be on the Australian dollar, US dollar. So now you're looking at the Australian dollar, US dollar. Again, this is a 30-minute time frame. We have the weekly VWAP here and its first deviations. So the setting is the same. And I want to point out a couple of trades here. So this is Monday. Ideally not to trade this strategy on Monday, but then the price started to trend in here, moved above the first deviation in here, made a pullback, and this was the reaction. This is a long trade scenario, so it was long from here. Then the price went aggressively down and up, so nothing to trade in here, but in this place, another possible trade entry. Not ideal case because the price moved up and quickly down, but still it was above the first deviation, made a pullback, and then boom. So again, long from here with another successful reaction. The next one was easy to spot. The price was again moving above the first deviation, made a pullback, long from here. Then the next one, pullback to the first deviation, another long, then another pullback, first deviation, long from here. In this case, the price moved a little bit over 10 pips against that long position, but if your stop loss was wide enough, then this would be another winner. Now another long would be after this pullback to the first deviation, long from here. In this case, this was a losing trade. After that, the price wasn't moving above the first deviation, and this looked like a start of a rotation. Now, so far I've been showing you examples which I picked good trading examples, but if you trade this strategy as a standalone strategy, I must warn you, you are not going to have consistent results. It's likely to happen that you'll have many winning trades one after another, but then you can also have losing streaks. This is not super consistent trading strategy. In the long run, it has positive win ratio of around 60%, but the results are not as consistent as if you are combining this strategy with another strategy. What I prefer is combining it with, for example, volume profile or price action or order flow, and I'll show you how to do that in a couple of examples. So let me switch to another chart. It will be the US dollar Japanese yen. So this is the US dollar Japanese yen. Again, the same setting, 30-minute time frame. The first trading example is in here when the price was trending. I know this was Monday, so not ideal trade, but still serves well as a nice demonstration of how to trade this. There was the pullback to the first deviation, boom, this was the reaction, but it's not only that the price hit the first deviation in here, but also, let me print a line there, there was a strong high, the price reacted to this place pretty aggressively in the past, which means that it worked as a strong resistance in the past. This level. When the price blew past that resistance, the resistance level became a support. If you are a member of my trading course or if you watch my videos regularly, you know that this is one of my favorite price action setups, and as you can see, it very nicely aligns with the signal from the first VWAP deviation in here. because it tells us that this is a support from which the price should react. And also the first deviation of VWAP is telling us that this is a support from which we should go long from. So this is a combo of two trading setups. One is a VWAP trading setup, the other is price action trading setup, and both those are pointing us to this level. And this is exactly what I like to do. I like to look for combos like that, which significantly improve the win rate of this VWAP strategy. So this is one way how to do this. Another way is use volume profile, like for example in here, and look for confluences with volume profile. So if I use the volume profile over this area, or I can actually use it like this, it doesn't really matter. It always points me to this significant volume zone. And as you can see, the volume zone is at this place. I mean, the peak of the heavy volume zone is in this place, at the same place where the price made a pullback to the first deviation of VWAP. So it's not only this VWAP trend strategy telling me to go long, but also it's volume profile trading setup telling me to go long from the same place. Alright, now in this video I won't be talking about volume profile setups too much. If you are interested in that, then visit my website. I have a book there free for download, so you can check it out, or you can check my volume profile video course. But in this video I like to stick to the topic, which is VWAP trading strategy. So let me continue with another example. In this case I'll also use the volume profile in combination with the first deviation of VWAP. In this case we have a heavy volume zone in here. This is the beginning of that heavy volume zone, and as you can see, there's also a pullback to the first deviation of VWAP, and boom, this is the reaction. Alright, so again, combo of two trading setups. One is volume profile setup, the other one is the VWAP setup. Now let's go for another one. In this place, the first deviation of a VWAP is trending again, which is telling us that we are in an uptrend. The price is moving above the first deviation, which is ideal, and we are looking for places to go long from, and we are waiting for pullbacks to the first deviation. Like in here, this is the place where the price touched the first deviation, and boom, this is the reaction. Now, one more thing to notice here is, if I print a line here and delete this volume profile, is that the price reacted to this zone in the past, telling us that this was a resistance. When the price blew past that resistance, the resistance became a support in here after the price went past the resistance. So we have a support, and at the same place we have VWAP based support. So again, we have combo of two trading setups. One is price action setup, the other one is the VWAP trend setup. Alright, so this is how you make this strategy more profitable, more consistent, and more viable to trade. Now, looking at this chart, there's also another place to go long from. It is after this uptrend, after this pullback, the long would be from here. In this case, the price didn't react at all, so this would be a losing trade. Afterwards, after this, I wouldn't really consider this uptrend anymore, so I wouldn't really advise to go long from here, because the price doesn't really look like trending anymore after this. Now let me switch over to the next chart, which will be the British pound. So what I wanted to show you here is that sometimes when there's a trend like in here, the price simply doesn't make that pullback to the first deviation. Yeah, it would be nice if it did in here, in here, in here, but it doesn't. So in case like this, there's simply no trade. All right, it happens, and sometimes even though the market is trending, you just don't get a valid trade entry. But if you look here, you can see that there was a valid trade entry in this downtrend where the price moved below the first deviation in here, and the first valid short was from this place. See, the price was moving below the first deviation, it was trending, and short from here. And what adds strength to this is volume profile. Heavy volumes traded in here at this price level. Then there was this little pullback to those volumes. Price tested this high volume zone and boom. So again, we have a combo of two trading setups. One is a VWAP setup, the other one is volume profile setup. The volume profile very nicely adds strength to the VWAP setup. Now the next one, next viable trade entry was in here, short from this place after this pullback to the first deviation. And there was also a nice combo of two trading setups. I'll print a line here again. This is the price action setup all over again. See, the price was reacting in here and in here, which means that it worked as a support in the past because the price was reacting to it. But then when the price blew past that support, it turned into a new resistance, right? So we have price action resistance as well as VWAP setup, which is telling us to go short from here, right? So that's the favorite combo to add strength to the level. Now, as you can see, the price is currently reacting to another pullback. This was the pullback to the first deviation, and this was the reaction. In this case, I don't really see any strong confluence with more trading setups here. There aren't any heavy volumes in this place, although we could consider this a valid price action confirmation because the price was reacting to this zone in here, also in here. So support turned into a resistance, and also we have the first deviation of VWAP here. It doesn't need to be exactly to the pip. It's enough, at least for me, that it's in a general area. I mean, the confluence of the two trading setups is in the same general zone. All right, that's enough for me to consider it a viable confirmation. Now let me switch over to one more chart, which will be the ES. And in here, I'll just do a quick comment because I think that you've already seen quite a lot of examples, so you know how to trade this already. So again, the setting is the same, 30-minute time frame. We are looking at ES, which is futures for Standard & Poor's Index 500. And in here, the first viable trade entry would be long from here because the price made a pullback to the first deviation from above, so it would be long from here. This would be a losing trade, although this trade would be a bit risky because the first deviations weren't fully developed and also weren't trending too much. So this would be a risky trade. If you took it anyway, it would be a loser. Now, another possible trade entry would be short from here. As you can see, we have a nice combo of volume profile setup as well as the VWAP trend setup. So pull back to the first deviation where heavy volumes were formed, boom, nice reaction. Then another pullback, another short, another winner, then another pullback, another short, another winner. It is a shame that in here the price didn't reach the first deviation. If it did, it would be two nice shorts, but no, price didn't make it there. Another viable trade entry would be in here, short from this place. Eventually, there was a sort of a reaction, very slow, very shy, but this would be a risky trade. Reason is, this was before a weekend, and I recommend closing all intraday trades before the weekend. So this would be extremely risky to trade. Now, I understand that a lot of you guys want more action and you want to trade not with weekly VWAP, but maybe with a daily VWAP, which will give you way more trading opportunities. I personally prefer this weekly VWAP and combine it with other trading setups, but let me show you an example how you can trade this on a daily VWAP and a 5-minute time frame. So let me switch the VWAP to daily, and I'll also switch to the 5-minute time frame. And as you can see, it looks very similar. If I zoom it in, this is 5-minute time frame, and this is daily VWAP, which starts to print at the start of the day and ends at the end of the day. And you trade the strategy the same way as with the weekly VWAP. What we have in here is price trending in this downtrend, and there's the pullback to the first deviation of VWAP and short from there. Let me delete that, short from here. In this case, I think that that was also a nice confluence. Yeah, if I print a line there. Heavy volumes accumulated throughout the whole week are in here. You can see that on the gray volume profile. Also, the price, you can see, was reacting to this general area. So not a bad zone to trade pullbacks to when there's a downtrend like this. If you add the first deviation to it, you have a nice place to enter a short trade from. Another viable short trade in this zone, in this immediate area, would be from here, and the next one from here. Afterwards, short from here, but this would be a losing trade. And then the price goes to rotation again, so it's not trending anymore. Alright, so as you can see, you can use this with a daily VWAP as well. And if you are not an intraday trader and you are more into long-term trading or swing trading, then you can use this strategy as well. I'm using it too, so let me switch to my swing trading workspace and show you how I do it. So this is the layout which I use for my swing trading. It is a daily time frame. You're looking at US dollar, Japanese yen, but you can do this with any other trading instrument. And I'm using yearly VWAP and yearly first deviation. So at the beginning of the year, the VWAP starts to calculate along with the first deviations, and I'm trading the same way as I showed you. So if you look at the chart, let me just delete this volume profile. If you look at the chart, then the first trade entry, the first valid trade entry would be a long position. After this pullback to the first deviation, long from here, this would be a losing trade. Then the next one would be after price went above the first deviation in here, long from there, another pullback to the first deviation, another long, then another pullback, another long. Alright, so as you can see, the strategy stays the same. The only thing that changes is the time frames of the VWAP and of the candles which you see on the chart, but the strategy is versatile and you can use it on any time frame with any VWAP setting. And as I was saying, this strategy is more consistent and with better win rate if you combine it with volume profile, price action, or order flow setups. I teach those in my trading courses, which you can find on my website. So let me show you real quick. So this is it, trader-dale.com. If you click this button which says trading course and tools, then it'll take you to this page where you can browse my courses. There are two. The first one is called the Elite Pack, and it will teach you everything there is about volume profile trading. There's a video course, my personal trading levels, which you'll be getting every day, and also volume profile indicators, which I developed for various trading platforms. You will also get my custom-made VWAP indicator and dedicated tech support for all our members. Here is a video which you can watch and it will show you everything that's included. Now, if you guys are interested in learning how to trade with order flow, then go over here. This is the order flow pack, ideal for those who want to day trade using this fantastic tool. If you want both order flow pack and elite pack, then there's a discounted package where you can get both of those together. Alright, so that's about that. That's about the video. I hope you guys found it helpful, and I'll be looking forward to seeing you next time in some next video or in our members area. And until then, happy trading.